I'm going to go ahead and it's 10:06, time for a reversal time. Russell's in rally mode right here, and that's at a 4.8. So of course it's not. It's the lower time frame. So the higher time frame, 6. Still in rally mode. We're at that first level where we could run into some resistance here in the Russell. There it is. It's starting to pull back a little bit here. And that pullback, it sure, folks, I cannot emphasize more than I do about swing levels. It went to the swing level and we got a reaction. No, it didn't stop. Or at least has not stopped yet. We haven't finished this candle. But at least we get reactions at those, and at least we know where we're going to get reaction. One, you can prepare for it so it doesn't surprise you. Thanks, Chris. Appreciate it. And then that gives me the confidence to say, I'm expecting this reaction, just like when we were short the NASDAQ and it got down to the support level 2 and it did a reaction. Okay, it didn't surprise me, so therefore I was prepared for that reaction to go against me. Now, another thing is, if you feel that it gets there and it's enough money that you want to take money off the table or take it all off the table, so be it. You don't want to take any pullback. Sometimes, maybe psychologically or with the way the things are set up, it might be time to just go ahead and take the money off the table and just be done with it. Okay. The NASDAQ did a little bit of a rally. We're in chop mode now. The S&P is doing a bit of a rally, but it's still struggling. With the tariff wars, they're going to hurt the multinationals, the big industrials like that are in the Dow and in the S&P 500 more than obviously the Russell with its small caps, mostly U.S. internal only. But the NASDAQ high-tech stuff, look and see what XLK does. And if you follow XLK, it'll tell you where probably the NASDAQ's going to go on a larger time frame. Okay, looking at 1010. We had our 10 o'clock reversal. It worked in the Russell. The 10 o'clock reversal in the S&P pretty much did a little bit of a reversal there. We did a little bit of a bounce. And when I say reversal, I don't tell you how long it's going to be. Good, nice rally to the highs of the day in the Russell here. And NASDAQ, we didn't get it. It happened over here at 10:06, but that's close enough to 10 o'clock. And we got our little bit of a reversal in the Dow. So I stand by those reversal times. I've been watching them. They've adjusted themselves a little bit. The reversal time at about 5 minutes into the market. That's why, the first few minutes of the market, it just kind of gets wacko. A lot of people, they're retail traders. NASDAQ is at a significant level here. And looks like a breakout's occurring. It had a buy way down here. There's no way I can do it. So let's see if it can follow through. The momentum and the squeeze are both pointing up. This should work a little bit. Way to go, Bob. Absolutely wonderful. Very, very hard to do crude oil. Very hard. Any profits are good profits there. And that's another thing I'd like for people to do is if they're getting in on trades, let us know, what you're doing, like when you're in, and you love to see trade at most of the daily. Okay. I tend not to do that only because maybe I've fallen in love with the NASDAQ. I used to do the Dow mostly, but it's become not a great trading vehicle. I go where the action is the best. I mean, when I say action, I don't mean the most movement. But crude's wild and woolly, and it's $10 per tick. You can make money in a heartbeat. You can lose money in a heartbeat. So making 10 ticks, is that 10 ticks each? So for a total of 20, is it a total of 10? 10 sounds like a good scalp. 20 sounds like a little bit better than that. But congratulations, that's very difficult. All right. Very, very, very difficult to trade the crude. Therefore, we had 5 weeks where we traded the inventory report and had winners every week for 5 straight weeks. Then we had a pretty good loser week before last. Well, the last week, I guess. All right, getting a little bit of bounce in the Dow. Pretty decent bounce in the S&P. And that Russell snuck up on me. We did that breakup over here, it was 85, and I had this level here indicated, so it's somewhere really between these two levels here. And we did have a reaction, you can see that right here. And then we went to the highs of the day, and we're still going. And notice how we broke out, we pulled back and retested the breakout, and now we're going higher still. Now we're getting a little bit late in the game here, so it's not time to go long there. It's probably time to be thinking about taking profits for people who are long. The NASDAQ, this level over here, I'm going to pull it over to the side. Let's change that color. All right. If you noticed over here, we had three candles where we had two down candles and an up candle. I basically call that a continuation move. Now, it's not typical of what you would get in and over here to the left, right in here. This is kind of a continuation move. And what happens is in stocks, you'll usually get a doji or something like that. You don't get very many dojis in futures. Very rarely do you get a doji, especially in the Renko. I mean, maybe you would in a minute chart or whatever. But here, by definition, you don't get them. But this is our doji, really. And it enters, it goes sideways for 3 periods, and then continuation to the downside. I believe that's where we were actually short. But let me see. Let me do it this way. That right there is a continuation, but it's right sitting on top of kind of a support level, and the next level down is right in here. It did go lower, and it did tag it, but after price, well, I'll get to that in a second. There's a continuation slash. This is kind of like what I call a pop out of the box. It'll either pop to the upside, or it'll drop to the bottom, to the downside. And of course, it went to the upside. Let me get you some info on Renko. I'll have to start putting up. I'll put that in together into the ebook that I'm creating as well. Investopedia has a pretty good one about it there, Chris. They use the standard Renko charts. I use a Unirenko. But what it does is it uses price movement. And depending upon what you put up here in your parameters. Yeah, okay. Unirenko is a little bit different when it shows... the standard Renko chart will not have wicks. Well, charts without wicks doesn't give you a whole lot of help, because you need to know where a stock actually traded. So that it basically is a variation off the Renko chart. And this is a 10 that we're looking at right now is a 10 tick with 14 range. Now, reversal, I mean. I'm not exactly sure how they use the reversal, but the key here is that each one of these candles is 10 ticks long. Or if I take it to a T6R10, which is 6 ticks, each one of these is 6 ticks long. And I set it up so that they overlap by 2. That's just an artificial way that they set them up in the Renko. But I've come here lately to want to look at the bigger picture. Two tick overlap. So in Unirenko terms, whoops, that's the wrong one. Let me go to data. You are going to be able to see this, unfortunately, but if you go to the Unirenko settings, there's a tick trend, open offset, and tick reversal. The open offset, it's an open offset. It's offsets the top and the bottom of the next opening. So if you get down 6, if you have 10 ticks, you go down 10, it overlaps them by only 2. And you can see those over here. See that overlap by 2, overlap by 2, overlap by 2, overlap by 2. And when it does reversals, it has to be 14. So right in here, it has to be 14 instead of 2. Okay? That's how they use that. But I use 10, 2, and 14 for the tick, the open offset, and the tick reversal. The only ones that really apply are the tick and then the reversal numbers. The reversals don't seem to matter that much. The overlap a little bit, obviously, just that makes it a visual, but the number of ticks in each one of the formed bars or candles is very important. Very, very critical. All right, we're getting a little bit long here on the rally in the NASDAQ. Let me back off to let us look at some of the other indices. The S&P's back into chop area. Dow's not exactly into chop. It's kind of into grind lower mode, but it's definitely not tradable. And up this high, it's very difficult to be trading the Russell. It's already up at the primary pivot, so it's by far the strongest of the indices today. Well, at least for now. All right, I need to take a very, very short break. It is 10:23. We've got about another 30 minutes or so. I need to get something to wet my whistle, or I'm going to lose my voice. Okay, he's back. Oh, thank you very much. I was about to get so parched that I couldn't speak. There are other descriptions about the Renko. Let me find the other. Okay, here's a pretty good one as well. It's on stock charts. Oops, let me get actually a clickable link now. Copy. There you go. There's a bit.ly link. Both of those are pretty good explanations, and obviously you can probably go out to YouTube and see some things that are out there as well. But stick around here, and I'll teach you what the way I trade the Renko charts. They work for me. Don't necessarily say that they'll work for everybody, but I think they do a very, very good job of displaying where the trend is. I want to trade in the direction of the trend. I want the tide and wind at my back. It covers up a lot of mistakes. Lots of mistakes. If you're if you get a bad entry, it can be covered up by the trend. All right, we're rolling over again at 10:30, bottom of the hour. There's another reversal period. So, yeah, we're not doing so hot out in the markets today. We look at the overall. S&P's down 18. That's quite a bit. We can probably come back another 20 points easily. NASDAQ is down 43. It was down 50 something a little earlier. Easily come down another 50 to 60 points. Russell's kind of hanging in there. I mean, on a daily chart it looks, whoops. Well, it might actually help if I pull this over here and let you guys look at what I'm seeing. Well, come on. I let go of you. Okay. There's the S&P. Let's go to the main chart. And what I'm thinking is it can pull back here to about this 28.12, 28.15 level. The NASDAQ can pull back easily another 20 or so points. 50 or so points. Russell, this was really, really hanging in there nicely. Now, here's the problem I've got with that. Is this just distribution before they can get themselves out of it and maybe get themselves short, because the stochastic RSI looks like it wants to roll over. But we need for a close probably below this volume point of control, the pink line there. Dow's over 200 points down. Really, as we could tell, really, really weak. We're definitely headed for 215 and maybe lower very quickly. Anyway, that's where we're at. All right, Russell just can't get above that primary pivot at the moment, and with the rest of the market's pretty weak. I'm not surprised. NASDAQ still hanging within earshot of the highs of the day, but coming back. It's at the S2 level. It needs to hold here, maybe tick a little bit below it and get some people short, but it's a bit of a zigzag, kind of wave patterns. You notice how in the S&P, the NASDAQ, happens a lot in the NASDAQ. You get these waves there, and then it kind of waves up and waves down, waves up. Now this little sideways movement right at the support, somewhere around in there is a pretty good place to be going long for the wave up, and now the next wave down, and then the next wave up. That's why I like the NASDAQ. It moves, and it moves in somewhat predictable manner. It's my favorite trading vehicle at the moment. The Dow used to be one that did that until February happened. Hey, RJ. EMD. Don't know what EMD is. You're not talking about a stock? EMD? Mid cap. Futures. Okay. / EMD? Okay, yes. No. Hey guys, let me. I can take a break real quick. I'm gonna go to the window real quick. I think I heard thunder and lightning. I am not gonna kill my computer just because of this. It's getting close. Yep, we're getting awfully close. If I get thunder and lightning storms this early in the day, it's usually pretty nasty. Usually involves the front. But no, I've never traded EMD. $10 a tick. Well, that would probably almost rule it out. Does it move reasonably well? You know, that's the biggie. I mean, it moves obviously. In / EMD in Thinkorswim. Low volume. Okay. See, that's the other thing. Well. Da 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 da. There's certain criteria that I want in a trading vehicle. I want high liquidity. I want it to be very technical. I mean, so you get some slippage. Okay, you have a spread. I don't like spreads. It's already hard enough without that. Get rid of you. Round the clock trading. So if you have low liquidity, you may also have trouble getting in and out. Okay. Interesting. I would have to look at it. The liquidity issue would be a potential negative to me. Slippage. We're already at a major disadvantage as a retail trader. Not having big bucks, not having black boxes help us, that kind of stuff. Black boxes are not magic. They're only doing what humans have programmed them to do. So you're trading it fairly well and being successful? If so, come on and tell us how you do it. Show us. I'm all ears. Well, some people say I'm all mouth. Well done, RJ. The $10 a tick is, I like the $5 ticks that I get in the NASDAQ, Russell, and Dow, because I can control the dollar risk. Now, if I'd had yesterday's done exactly the same stupid trades, maybe in the EMD, I'd have been down $1,200. Okay, cool. Now, did I pick up any of the Russell when I said it was near the bottom? No. Should I have? Maybe. This. Let's try that again. The lows are starting there. It's kind of hard to determine where the best. This little box, let me change the color here. I've got to figure out how to change my default colors. That right there is kind of a consolidation boxy pattern, and once we broke out above that, it was going to this level here of at least 89. It went to the primary pivot, which was not what I would have expected. Okay, no. Hey, even if you said I missed a trade, that's okay. There's so many of them that I'm probably not going to get half of them, so that's not a problem. If you can look, I'm a fighter pilot. I've got rhinoceros skin. You can't really hurt me. I don't wear my epidermis inside out. You guys can say whatever you want. I'm okay with it. In fact, I would prefer you guys to say exactly what you're thinking. That way we all kind of say, well, you're telling me what you see, I'm telling me what I see, and I'll either agree or disagree with you. And there are going to be times I'm going to miss trades or make a mistake. Don't let you go there. Well, I do have a button that bans you there, Chris, and throws you out of the room. I've got two different buttons. I got one that throws you out of the room right now, and you can come back in. I've got another one, and that basically says you can't come back in. You will not be able to log back in until I say so. Yeah, RJ, I'd be, if you see a trade in the EMD, please let us know. I'm a big fan of the MDY. All right, I'm going to put up a poll here. And let me see. Instant poll. Multiple choice. Okay, we started a poll here that says, which instruments do you like to trade? Just give me an idea of what we got here. NQ, is this on just your favorite? Oh, RY is really RTY. I do apologize. And you got multiple choices. The S&P is in chop. The NASDAQ has pulled back to a major swing level. And pretty much chop in the Dow and chop in the Russell. So we have 8 people like to trade the E-minis. Okay. I'm surprised we only have 5 people say they like to trade the Russell. It's not my number one instrument, but when it was the weakest and whatever, I'd pick on it. There was a 2-week period in there where it was really by far the weakest index out there, and I would short it almost every day and make money. Almost like, you like EC? EC. What the heck's EC? Can you tell me 6E? Oh. I'm not a big Forex guy. I would be willing to listen to anybody who could tell me how to better trade it. But I've got enough. You know, Frank. I mean, you probably Euro futures, right? The other thing is the DAX futures, but the DAX has a high. Yeah, it looks like our Nasdaq is losing it. It's probably headed down to the next level of 25, 74.25, but can't short it here, for me anyway. Right. The Forex, really good trending vehicles. And if you want to hold on for a while, you can do it. Just to look at, hey Johnny, how you doing? Okay, I'm going to go ahead and stop the poll. Looks like we've got it. I'm going to go ahead and... Oh, I didn't share the results. Sorry. Now can you see the poll? Never been a big bond person, Jack, here. Okay. Oh, you can't see it? Okay, well, let's take a picture of this. Right. Yeah, I had forgotten to put share results in there. My bad. Lots of people like to trade. Well, it's basically a tie. All the major indices minus the Russell. And we have 7 others, so. Yeah. That's cool. The only reason I don't like to trade the E-minis, the S&P, is that the big killer whales are in there, and the black boxes are definitely in there. They are in the Nasdaq, but not as much. Not as much in the Dow and the Russell. I just don't want to. I don't want to be fighting with the piranha out there and the barracuda. Well, that Nasdaq sure did. Talk about missing a trade while I'm sitting there flapping my lips here. We went down to about the level here. What do we have it? Whoops. That level right there is what I've got. I'm looking at. Okay, let's do this. That's kind of what I'm looking at. And what did we get? We got a reaction. Now, this is going to bounce off that, and it'll go up a little bit, but we still have momentum room to the downside, but the R squeeze doesn't. What happened to the YM in February? Are you talking about the bounce, or you're talking about why did I have to move off of it? Why did I stop? I shifted because we had. It started not behaving very well. We started getting these big moves and then nothing, and we go for days where we get nothing, and it wasn't trending well, and so the markets kind of go through phases, kind of like kids growing up, and toddlers to infants to teenagers, and then they actually get some brains around mid-20s. But so you've got to trade what works best. And right now, for me, it went from the YM to the RTY because it seemed to be giving lots more good shorts, good setups, good trending, good running. And then it kind of went away, and the NASDAQ was better. So you got to keep your eye out for what's working at the moment and kind of move around. Now, it doesn't mean hopping around daily or intraday. Pretty much, let me... it's the bigger picture. Let's take the NASDAQ here for one. All right, let's take it and zoom it in. That's a 4-tick, 8 reversal. That's almost like having it under a microscope, because it has 4 ticks per candle, but 2 of them are overlapping. So you're going to get trends, but they're gonna flip flop like crazy. Well, it's not per point; it's ticks, trades, and it'll be price levels. So if I zoom in, okay. You want to know okay, 4 ticks per point, correct. Sorry. You obviously didn't make it to the presentation yesterday morning, Chris. And I felt like I had to do the presentation earlier than I wanted to. I wasn't totally quite ready. Let's see. Okay. Here we go. ES is $12.50 per tick, and it's in quarter point increments. So each point equals $50. Dow, $5 a tick, 1 point increments. So 1 point equals $5. Then you get the NASDAQ and Russell, $5 a tick and quarter point. So there's 4. Actually, that's not true, Steve. Whoa. Let's go over the Russell. I think it's in 10. Found another error. Okay. Yep, it's in 10. So this is wrong. Okay, make a correction right here as we go on the fly. The one thing that gets me is that I got myself so acclimated on being able to figure out how many dollars per points and ticks and whatever in the Dow, and it's harder to do it in. Then you have to add an extra multiplication factor going. All right. So the idea is, sorry. So did that answer your question? The larger time frame is numbers of ticks for. Let's go back to the Nasdaq. There's the 4. And let's go look at a 6. Now it looks a little smoother. It's backed off a little bit. That is my lowest time frame that I like to go to. Here lately with a lot of chop, I like to look at the 10. I want to get behind the big trends that are going up or down. And there is another one that I toyed with, but I don't like because in chop you'll miss a lot of good moves. Okay, the 12. Now here's the problem. Let's just say that I'm in a 10 tick and we're using Counterpunch Trader for this. All right, let's go find one. Or not. Counterpunch Trader has gone long on this one there, Chris. Let's hold on a second. Let me get rid of this. Okay. The first target is 34 ticks up. Target 2 is 53. The target 3 is 71. You go, woo, that looks good. Yeah, but the risk is 42. The downside and upside. The problem is that the stop on the initial stop is much, much wider than if I should go to the 6. And when I look at pretty much the same time frame there, the stop or risk is 28 ticks. That's close to 30. 30 would be my upper limit. And so therefore, I do like to use the 1014, but if we're very volatile, sometimes the stops are going to be a little bit wide, which is if you get on the wrong side and let it go the entire distance, you'll end up with $600 losses like I did yesterday. So I like the fact that the 6 is pretty responsive and it shows, and I'll bounce back and forth and I'll have the 6 showing. If we're doing a lot of trending, the 6 is really good. If it's kind of iffy and I want to see what the big picture is and not get mesmerized with the flip-flops, go with the 10. So I've got this 10 will usually be off on another monitor panel, and I'll have the 6 up on the upper right hand corner. So I'll have this one, this time frame down below, unless I tell you otherwise, and I'll have that one up. That will give more sensitivity, but you get more false signals. But you also get tighter stops. You have to find out what really works for you. We're pretty much in chop and everything at the moment now. We're coming up on 11 o'clock. Looks like the thunderstorms missed me. Thank goodness. We're coming at the back end of earnings season. So, does that mean we're going to be Does that mean we're going to get less volatility? We're going to have less of an opportunity for things to go up. And I want to show you a chart of a thing called a T2122 in TC2000. And the T2122 is the 4-week new highs divided by the 4-week new lows, the ratio. And we're pretty much in the middle. When we get down here to below 20% or reaching, so the ratio is 20% versus 80% going to new lows. If we get too many new lows, we'll get a bounce. If we get too many new highs, we're probably going to get a pullback. Right now, we have been getting in the middle range here. That just means we're kind of getting wound up. We're kind of in no man's land. So I keep track of that every day. See how we're doing. If I see us getting into a potential area, there goes the Russell while we were talking. And is this our 11 o'clock rally? We normally have been getting a rally around between 10:30 and 11. Yeah, David, I just saw it. Sorry. Looks like it did a breakout over 93. Couldn't do a follow through. It did give a CPT buy signal there too. R squeeze and the momentum look okay. Boy, it sure was still in chop where that occurred. Where the breakout occurred, maybe not so. I'd be concerned about this one. Now, that was the breakout, but of the dots, but I'm going to use the body of the candles. That was the breakout. And yeah, let me hold this down. Okay. Try that again. All right. That was the breakout. There's target 1. It didn't even make target 1. Now, it's not done yet. And looks like it hit target 1. And target 3 is way up there. Dow's in a little mini rally, but it's still not much to write home about. Looking like the S&P's maybe trying to attack the high of the day. That would be up here at 42. And then NASDAQ. We've got a little buy signal here on the 610. It's at S1, so is that going to follow through to the upside? The momentum indicator is kind of flat. R squeeze is not all that great, and it's pulling back. Yeah, the last 3 or 4 weeks have been very, very difficult to trade. Extremely difficult. I guess maybe we could consider ourselves lucky that we're making money because a lot of times, well, maybe that's just because we're near the highs. If the bulls are not going to give up easily. The bears can't take control, but they're not going to give up either. So we're just getting this arm wrestling going back and forth and back and forth. And unless you want to scalp, which I don't really want to, it's a little more difficult to find decent trades. Just be patient, be selective, and we'll make it. Now, 40, what time did we go along there? We did have the opportunity to participate to the downside in this area right in here. That I basically gave up on. I may have been off on another chart because this one happened pretty fast. 42. Yeah, about 3 minutes. And looks like we're trying to break out of this. Where would we go? First target is right there. Do I need the CPT system to tell me that the top of the 5-minute opening range and the bottom of these candles over here are a good spot? Probably not. Alright. Let's draw that. That's the first level. The second level is going to be right up in here. And where is that at? That's where target 2 is. And where's the third one? Target 3 is right up the top. And so when people are saying, well, do you want or need the counterpunch trader system? Since I've already got it, it pays me to use it. Do you really need to have it? The answer is probably no. Especially if you can look over my shoulder. Let's see if this puppy hits target 1. Notice how we had the crisscross and change from downtrend to uptrend, and then we broke out of that little consolidation box. R squeeze was going up, momentum bar going up. It went to the bottom of that line area. It didn't go to target 1, but it went to just below it. All right, let's say that it went from 31.5 to 30. Was that 36.5? Is that 5 times 4 is 20? 20 ticks? Yeah. You take 15 or 20 ticks on that one. But guess what? It's going to come back and take us out. Now, where's the volatility stop? The volatility stop's down here. Where is their stop on the CPT system? All the way down here. It's at 42 3/4. For me, if it got up there and it's pulled back this far, I'm probably going to be below the bottom of that candle. Let me show you what that is. I'm going to be right below that candle right there at a minimum. But if you went long there and you got up there in target 1, I tend to take break even plus because that's in the trade plan. If it goes all the way to target 1 and comes all the way back and goes back to basically my entry, I probably don't want to be there. Sometimes it comes down there and then immediately goes higher, but not usually. Usually it comes back this far, it goes lower. Now, some people will say, "Hey, Steve, what's this business about breakouts get retested?" Yeah, but sometimes breakouts get destroyed. So you have to decide what your trading plan allows you to do. Do you give it more? Because let's say you went long on the breakout over S2 here, and it gets up to your target for target 1, and so you take some off the table. And let's say that you have 20 ticks in the bank. You could allow it to go, say, 10 ticks or so below. Well, you could actually let it go 20 ticks below your entry and still have a break-even trade. I don't like to have winners that turn into losers or break-evens. So if you did it to, say, something like 10, and you had, what did we say that was? 31 half and 2.5 points would be 29. So your stop would probably be right about in there. And that's technically defensible because you went up, you pulled back, and if you come back below this level, this line will start turning over. The momentum will start turning over. The R squeeze is already starting to turn over. They all go hand in glove. I guess I'm being Captain Obvious here. You have to come up with a trade plan that you feel comfortable with. Some people don't have a problem with giving stocks a lot of room, or sorry, the futures a lot of room to trade. All right, it would have died pretty much right here. We're still looking at the volatility stop. Now the volatility stop lowered itself. I don't lower stops. Now, my stop would have been taken out at 29.5. Let's see if the 28 stop would be taken out. Yes, I think it just hit that on that last candle. I don't think it's going any higher. I think it's still starting to wobble. It's going to that's what it's going to do. At least that's what it looks like. All right, folks, it's 11:15. Well, actually 11:10. It's a Friday. I want to thank everybody for being here. Again, if first 35 to sign up, get a pretty darn good deal under $23 a month. I would really like to have all of you guys sign up and to be here. If you guys have any question whatsoever at all, my email is topgunfutures@gmail.com. Hey, Art! Well done, sir. Thank you. What I think what we need to do, the membership starts on 1 September, so we're still open till the 31st, so we've got a couple of weeks more. But the cutoff's supposed to be for after the first 35 sign-ups. We're about a third of the way there right now, so it's starting to get there. Oh, thank you, Art. And then value, I think you're going to get the best value out there of anything. We're going to have e-learning webinars. We're going to have, I'll help everybody set their system up. If they need to, one-on-one help, not a problem. Today plus 250. So I had two trades, 2 winners. obviously with divided by 5, you come up with it. It was okay. I mean, 250 to 300 is my quit for the day. Being a Friday, I figured I wasn't going to push it some more. Probably should have made one more trade in the NASDAQ or maybe one trade in the Russell. But that's the way it is. I normally trade 2 contracts. On one of the contracts today, I screwed up, and I had changed my order quantity on one of the panels here was set to 1, and I didn't realize it. So 1 or 2, that's all. So I don't risk very much, and so I didn't get the big runner. I didn't get a 3, a 1 and a 3. I just got a 3. So I basically left 15 ticks on the table. Not a big deal. But you guys have any questions? Fire it off there. I'm happy to talk to anybody via Skype or on the phone. I have long distance capability, free to talk to people in Canada, Mexico, and Puerto Rico. And yeah, I mean, there are a number of people here who really know their stuff, and I'd love to have them continue as members. I really appreciate having the extra eyes on the markets. And please do not be afraid to ask questions. Please.